Good morning, everybody. This is Chris Cunahan. I am the director of Delaware's newest division, the Division of Paid Leave. Welcome to this webinar about claims, our claim system that's starting up very soon. Just want to give you a couple of background information before we get started here. Just wanted you guys to know that, first of all, thank you very much for joining our first employee webinar about Delaware Paid Leave. You've probably heard about this program over the last few years, but now it's time for us to focus in on getting you guys, the claimants, the employees, who are really the heart and soul of this program, the reason why we're there. And we're here to bring you up to speed about how this program will work. We've tried to keep today's programs short. I like to talk, so that might not work too well, but hopefully there'll be enough time for Q&A at the end. Throughout the presentation, please feel free to submit your questions using the Q&A feature, and it should be down around there on your screen. And then you'll be able to, we'll address those questions that you've posted at the end. A recording of this webinar will be available on Delaware Paid Leave website, which is de.gov/paid-leave, along with a Q&A document that will include all of today's questions and answers, even the ones we aren't able to get to on time. So let us begin. So this program is designed primarily for designed to help those who primarily work in the state of Delaware. Primarily wasn't defined in the act, but we've defined it as those employees who work 60% of their time or more in the state of Delaware, which will, if you are working part-time from home and your home is outside of the state of Delaware, if you work a 5-day work week, that means that if you work 2 days from home, then it is you are covered by this program. If you work 3, then unfortunately you're outside of the state for far too long, and you should also move here to Delaware. You also should be working for your employer for at least 12 months. And during that most recent 12 months, you should have put in at least 1,250 hours. Both of those, the 12-month and the 1,250 hours, are from FMLA, which is the federal law that's been around since 1993. FMLA is something that larger employers have been following since 1993. And that 1,250 hours works out to be just about 25 hours per week. Next slide, please. For employers, this Delaware Paid Leave is mandatory for businesses with 10 or more employees. If you have between 1 and 9 employees, you are exempt from this program, but you may opt in, and you will get the same terms, the same conditions, the same rates as all other employers that are in the program. The only requirement is you have to stay in for 3 years. If you have between 10 and 24 employees, the only coverage that is needed to be provided is parental leave coverage. But you can provide additional coverage to your employees if you so choose. And then if you have more than 25 employees, you're required by law to provide all lines of coverage to your employees. There's only a handful of exceptions to the types of employers that are in this program. Federal government employers are not part of this program. It's because federalism, the feds tell the states what to do, not the other way around. And then also seasonal businesses. Think of Funland down at the beaches that shut down for a month or more in a row are exempt from this program. A few other minor things, if you are a railroad worker, you're covered under the National Railroad Act. Besides that, pretty much every employer in the state of Delaware, whether it be state government, county government, local government, cities or towns, whether that be nonprofits, whether that be religious organizations or faith-based organizations, those that are usually excluded from employer mandates, those companies are required to be part of this program. Next, please. So what is Delaware Paid Leave? Next. So just as an overview, the idea of Delaware Paid Leave is that it helps ensure workers have financial support so that you can take leave of absence from your job if and when needed. The FMLA program that's been around for over 30 years now provides unpaid but job protected leave, which is great that you can return back to your position or one like your old position after you've dealt with your family issues. But if you are someone who needs to pay rent or mortgage or your food bills, having a paid benefit like PFML, paid leave, is very, very important. And that's what we're here to do for you. This program started on January 1 of 2025 with contributions so that we'd be able to have a reserve of money to pay out claims. And starting on January, at the beginning of January of 2026, we'll be able to start accepting claims applications and soon thereafter pay out those benefits. Now, why do we need this? So 30 years ago, more than 30 years ago, it was relatively common. And most financial advisors will tell you the best thing for you to do as a household, when you're out there in the world, is to have about 6 weeks of your savings set aside, 6 weeks of your pay set aside for emergencies. Back 30 years ago, when FMLA started as an unpaid leave, more homes, more households had that. Now fewer and fewer do. I believe 65% of Americans households now live paycheck to paycheck. So it's extremely important that paid leave be there so that the promise of FMLA can actually be used by employees who need it, not just the wealthiest of us who can take it without too much fear of not being able to afford the necessities of life. Next slide, please. So how does it work? First of all, this is income replacement benefits, which means, first of all, you have to have income that needs to be replaced. So it's for employees who are actively at work. If you go out on approved leave, the state will pay 80% of your average weekly wages. And we look at FICA, which is the rules that determine basically your benefits and your taxes for Social Security and Medicare. Those are FICA wages. So we look at FICA wages earned in the state of Delaware, and that's both what you pay in contributions and what you get in benefits. So you'll get 80% up to a maximum of no more than $900 per week. And FICA is a good basis because it includes not just wages, but also commissions, bonuses, and tips. Over time, that $900 per week will be indexed to inflation, but not immediately. And what this 80% up to $900 per week basically means is that if you're making less than $58,500 per year, you're going to receive 80% of your average weekly wages. If you make more than $58,500, you're going to receive $900 per week, usually. Next slide. So when you're dealing with contributions, the total cost of this program for all lines of coverage combined together is 0.8% of your covered wages. If you are an employee of a company that has between 10 and 24 employers, you're only required to provide parental leave, which means that you'll only be paying basically less than 1/3% in order to get parental leave benefits. Now, what that means is that employers and employees are able to split these costs, whether it be the full 0.8 or the third of a percent for parental leaves, so that employees and employers can split up to 50-50 for the cost of the program, and that will be through payroll deductions. And those amounts, if your employer requires you to share in the cost of this program, that cost has already been being paid in your paycheck since the beginning of this year. Next slide, please. How do you take paid leave? That's really what's about to begin. Starting January 1, that is the beginning of this program. And this program is really a bundle of 4 different leaves. We think of it as paid leave, but really it's 4 different types of leave. The first one that I've already mentioned is parental leave. You may know this as good old-fashioned maternity leave, but it's provided regardless of sex, gender, or marital status. And it'll also be available whether you're having you're having a child, you're adopting a child, or you're fostering a child. And it's for healthy children. If there's a medical issue, there's other types of leave for that. This is exclusively for when the child is healthy, and you can get up to 12 weeks every year in order to bond with a new child. Next slide. Medical leave. This is for if you, the employee, have a medical illness or injury. It's a lot like short-term disability that many employers provide to their employees, except it pays a little bit more. Most short-term disability is either 60 or 66%. We go at 80% of coverage, but it's not quite as long. It only provides 6 weeks every 2 years currently for the maximum benefit duration, whereas FMLA goes a little bit longer. And if you have short-term disability, that usually goes a little bit longer still. Next slide, please. Family caregiver leave. This is something new. Maternity leave, short-term disability, those are things that are kind of common. Not everybody has it, but more often than not, many employers will provide that. Family caregiver leave, there is no insurance product in the state of Delaware for this type of coverage, but it's increasingly necessary, especially for what's become known as the sandwich generation, those employees who have both young children at home and aging parents who need taken care of. So what happens with family caregiver leave is you get to take up to 6 weeks every 2 years to care for a close family member, a child, a spouse, or a parent when they have a serious illness or a serious injury. Next slide. And qualified exigency, which is a weird name. It comes from FMLA, and what it refers to is those, if you are an employee and your loved one goes on overseas military deployment, it allows the employee to take time off to take care of running a household while their loved one is on military deployment. And again, you get up to 6 weeks every 2 years. Now, you may think that if you had 12 weeks for a child, 6 weeks for medical leave, 6 more weeks for family caregiver leave, and then 6 more weeks for qualified exigency, that's like 30 weeks per year potentially. But just like FMLA, there is a maximum of no more than 12 weeks of any type of leave combined in any 12-month period. So there's an important overall combined maximum. Next slide, please. So in taking that leave, just like in the next slide, please. Taking that leave, just like in FMLA, there's 3 ways you can do it. Continuous, where pretty straightforward. This is the way most leave is taken. When you can leave on the date that you need to take off for your to care for the illness or injury, and then you return back at the end of the time period, and you don't go into work in between. And then there's 2 types of reduced schedule. The first one is a reduced number of days per week so that you only work, say, Monday, Wednesday, Friday, but you work full time on those days. Or if you reduce the number, the percent of the time you leave, and therefore you work half your usual schedule. Now, we at the Division of Paid Leave, we don't really get into how that time is scheduled. We mainly care about what is the impact on the total hours you work, because your employer is going to pay you for the time that you're in the office. Our benefit will be reduced to take care of your needs while you're out of the office on a prorated basis. And then finally, intermittent leave. This is the kind of leave that you would have if, say, you had migraines or some other chronic condition, where this comes on a every once in a while kind of basis, where you need to take a day off in order to address a sudden onset of a severe, serious illness or injury. And again, you can take a total of no more than 12 total weeks of paid leave in a 12-month period. The claims process. This is a basic overview of how the program will work. Again, once we get closer, we will be able to we're going to start posting screenshots of what the actual input screens will look like. All of this, almost all of this, is paperless. You do this on our website, which is Delaware Paid Leave, which you access through our portal on Delaware Paid Leave website, de.gov/paid leave. So the way that this happens, the first step in getting towards the claims process is something that every participant in the system who uses Delaware Paid Leave needs to go through, which is ID proofing. It's basically a process whereby you take a picture of your driver's license, you get a picture from your cell phone or from your camera on your laptop or your desktop, and then biometrics are used to make sure that you are the person in your ID. If nothing else, it proves that you are you. This is one of the main ways that we prevent fraud on the system, which has become rampant on so many different systems, especially with the dawn of artificial intelligence, making it easier and easier to fake identities, to fake paperwork, to fake accreditation. So the first step is to go through ID proofing. Then, once you've gone through that and registered as an individual in the system, then you enter in your Social Security number. For the past year, for all of 2025, your employer has been providing reports, an hour and wage quarterly report, which has each of their employees, their first name, last name, their Social Security number, the number of hours, the number of weeks, and the amount of wages that they earned during that quarter. That is the basis for much of the benefit process in Delaware Paid Leave. The first thing you do is you enter in your Social Security number. The system looks through all of those quarterly wage reports and find the employers who have reported that they have you. And then you are presented with that list of employers, and you select one or more employers who you wish to file a claim using that information. Now, you can do multiple employers if you have them, and each employer's data will be looked at separately, so that if you have two employers, one that you work full-time with and maybe one that you work on the weekends with for a little extra side money, both will be available to you. You can decide whether or not to do one claim or for both. Once you're linked up with your employer, then the system will go through a series of questions, will provide you with the correct claims application for your particular type of leave. Again, parental, medical, family caregiver, qualified exigency. And then the system will start asking you questions about your claim for the claims application. Minimal number of questions. Everything is entered into the computer system. By making it paperless, we don't have to worry about half filled out forms. We don't have to worry about forms that are lost in the mail or in another transition. We don't have to worry about handwriting we can't understand. We don't have to worry about somebody entering in a dollar amount when we're asking for a date. The system checks for all those things and does not allow you to submit your claim until the application is filled out as completely and thoroughly as possible, reducing error and speeding up the process. Now, if you have a claim that involves either your or a loved one's serious health condition, then there's a requirement that, just like under FMLA, a doctor, a healthcare provider, input some information to certify that it is a serious healthcare health condition. And what that means is that it meets the definition of a serious health condition that FMLA has been using for the last 30 years. Your doctor understands what that means. They're used to having these forms filled out. And so it should be a relatively simple process for them to fill out. Now, your employer is also going to review the claim as it goes along and provide a little additional information, such as whether or not you're actively still working there, or if you quit the day after or the day before you submitted a claim, whether or not it is a work-related illness or injury, because if it's work-related, it goes to workers' comp. It's not something that is done through paid leave. And then the system will basically go through all the reasons you might be ineligible. Maybe you didn't hit the 12-month mark with your employer. Maybe you haven't gotten to 1,250 hours of service in the past 52 weeks with your employer. Maybe you're no longer employed. Maybe it's workers' comp. Maybe you've maxed out your benefit. In each of those situations, the system is going to declare, see that you are ineligible, and will send you out a denial letter. Every denial letter that you receive from the system will have instructions on how to ask for a claims review by the Division of Paid Leave, where we go through all the paperwork, all the decisions, ask you for additional information, and then see if the claim was adjudicated properly. If the employer then gets the information back from the doctor certifying that this was a serious health condition, that it hasn't been marked as ineligible, then they'll review the process and we will advise them to pay the claim unless they know a reason why you shouldn't. They'll have to enter in the reason why. There's a list of pre-approved reasons why, and all these things will be listed on any denial letter you might receive, and the division will review to make sure that that claim was decided properly by your employer. But if it's approved by your employer, then it will be approved by the system, and we will begin claims payments. Now, for the claims denial process, if it's denied, then first the division will go through and review the claim. And then we'll send out at the Division of Paid Leave whether this claim should be approved or denied. And at that point, our decision, the Division of Paid Leave's claim review decision, becomes the official position of the reviewers. And if you go and ask for an appeal, or if you should go before the Delaware courts, the Division of Paid Leave will be the one that actually defends our decision. The old decision that was originally made by the employer is null and void. It goes off in the background, and it's just the Delaware Division of Paid Leave's claim review that is up for debate. Now, hopefully it's approved. When it's approved, then the system will come up and do an overnight batch job that will come up with the average weekly benefit and how many weeks of benefits you shall receive. And then every Thursday, that batch job will be sent to JP Morgan, our payment bank, and they will issue either a electronic payment to your bank account, or if you're unbanked, they'll send you a prepaid debit card, which each week, either on a Thursday or a Friday, depending upon your bank's processing times, will be loaded again with more information and with more money, or your bank account will get the next weekly benefit until the benefit duration is complete. And that's the process. During the time of an approved leave, your employer will not be paying your paycheck. You will only be receiving the benefit check from the Division of Paid Leave that's from the trust fund. Now, the trust fund is set up and is comprised of all the contributions that have been sent to us since the beginning of this year and will ever be sent to us. And those contributions can only be used to pay claims for paid family medical leave or the expenses of paid family medical leave. And all of our claims, all of our expenses, the trust fund will be subject to internal, external audits to make sure that your taxpayer funds, your contributions are used wisely. Next slide, please. So for each employee, there's a couple of responsibilities. I basically went through all that. The one thing that you need to do is once you're approved, the employee must keep the dates of leave current in Delaware Labor First and keep their employer informed. It's not as important under the continuous leave when you leave on one date and you come back at the end of that. But for a reduced schedule, and especially for intermittent, it's extremely important that you follow your employer's pay and sick policies so that it can be tracked appropriately. And of course, if you deny it, there's multiple options for you to request an appeal. And again, all of this is paperless. An important thing to note before we leave this thing, if you are unwilling or unable to use a computer to file these forms and these requests, you have the right to go either to your employer or to the Division of Paid Leave and ask them to fill it out for you. Now, you are still responsible for getting the information, but the employer or the Division of Paid Leave will help you, will be responsible for actually inputting that information that you're responsible for providing into the system so that we can move the claim process along quickly and efficiently. Next slide. Another important step here, talked a little bit about this. And right now we're working with the only papered portion of this program is the Certificate of Serious Health Condition. And the way it happens is the system, first of all, will make sure that any ineligible claims are, there won't be a Certificate of Serious Health Condition sent to as part of that process if you're ineligible for a claim. We don't want to overload medical practices with too many of these forms. But if everything seems okay so far, the employee will receive a form which will have information on how the doctor's office, either the doctor themselves, the healthcare professional, or their staff can enter into our system, or how you can provide that. You can provide that either electronically or in paper format to your doctor's office. So either the doctor or their staff can enter that information. They'll go into our system and they'll basically enter into our computers and be asked 3 questions. And the first question, if they answer no to, there is no second, there is no third question. But the first question is, does this illness or injury meet FMLA's definition of a serious health condition? Again, your doctors have been answering that for over the last 30 years. So they understand the requirements, and there's plenty of information out there on the interwebs to help them figure out what that standard is. And then your healthcare professional will be asked how many weeks should the employee take off to either address their own health needs or the health needs of their loved one, and does this leave qualify for reduced schedule or intermittent leave? Those 3 pieces of information are provided, basically confirmed by the healthcare professional. We are not doctors. We are not going to second guess them. If your doctor says you're sick, you're sick. If the doctor says that you have a serious health condition, that's good enough for us. The doctor is signing this and will be legally responsible if there's any fraud, and may actually have penalties. It could actually lose their license to practice medicine. So there are some severe penalties if they don't take this seriously. Most importantly, I think, especially if you work for a small employer where there's no usual HR person, and this may be non-standard practice for them, there's no private medical information being asked for on these forms. We're not asking for diagnosis code. We're not asking what is your medical illness. We're not asking for EKGs or x-rays or anything like that. And there's no place for the doctors to even provide that information if they wanted it, in part because it's not, especially if it is your loved one who has a medical condition, it's none of your employer's business. But second of all, we don't want to put your employer in a position where they have to be worried about your private, personal medical information. So we just didn't ask for it, and we have no place for it. So your information should be safe. Next slide. Help and guidance, this is the most important thing. If you've listened to me, I've used the term FMLA a bazillion times. FMLA has been around for 30 years, but if you're a smaller company, you may not know what the heck it is. FMLA has been around, but only applies to employers with 50 employees or more. That's over 300,000 employees work for employers who use FMLA. So many of the employers in the state of Delaware understand what's required. But those employers between approximately 10 employees and 49 employees, they hear me talk about, oh, don't worry, it's just like FMLA. And they're like, I don't know what FMLA is. We understand that more than half of our employees, the Division of Paid Leave, are dedicated to answering the questions by phone, by email, any way you send it in, from employers, employees, from doctors who may be confused about the requirements of this program. And you can learn more about the program at de.gov/paid leave, where there's FAQs and articles. There's recordings of exciting webinars like this one, but even longer that I've had with employers in the past. We also have a phone number that is 24/7, 365, available around the clock, around the year. Now, New Year's Eve, it may not be the best person you get, but you will get somebody. And they will be able to answer basic questions. Any questions that involves confidential information or a specific set of facts, that's something that you really need to come either to, you'll be rerouted. So what will happen is the person who answers the phone will take down your information. The next morning, that information will go through a triage. They'll either send it to us at the division if it's a policy-based question, or if you have a technology-based question, that'll go to our tech team, who will be able to call you back, and our division will call you back and help you figure out how to use the system well. Next slide. Another thing, on that website, you're going to find all sorts of video snippets. So you don't have to watch the full hour and a half. You'll just be able to watch a shorter, quick video to get the specific information you're looking for. And that's me. That's the Director of Paid Leave. That is my actual phone number. I can't believe I'm putting it out there, but that is my actual phone number, and that is my actual email. Be nice. It comes right to my desk. So give me a call if you have any questions. But we'll also take questions now.
Great. So we do have a question. If an employee has a baby in December, can they apply for benefits in January?
Yes. So we have asked, we have a Deputy Attorney General, and our Deputy Attorney General has given us some preliminary. We still need a lot of details, but first blush, it's actually different from what I had actually thought this program was going to be doing for those kinds of claims that start in 25 and people request leave in 26. I thought it'd be much more complicated, but it's actually pretty straightforward. This is a brand new program. We cannot penalize you for benefits taken, for time taken, either paid or unpaid, under a prior benefit plan. That's the way FMLA is set up. Each new year is a brand new year. So if you have the ability, if you have a child in December, you can take up to 12 weeks of paid parental leave, which is bonding leave, with this program. The one caveat you have is that you have to use the last day of your leave before that child's birthday or their gotcha day if they're adopted or if they are fostering.
Great. Next question. Just curious about enrollment for companies who would like to enroll, but were not initially required to enroll. Is that open to do now? When is the deadline?
Yes, definitely join us right now. Whether you were below 10 lives and you've grown, which congratulations, or if you just simply forgot to sign up back in 25, or since this thing has been programmed, that's all right. Our program is designed to allow you to enroll at any time as needed. For all of 2025, there are quarterly reports and quarterly contributions that are due basically 30 days after the end of each quarter. And for all of the reports that cover 2025, Q1 through Q4 of 2025, as long as you pay them or submit them in full by March 30th of 2026, there are no late fees. There are no penalties. We are giving up some of those enforcement, I hate to say this, revenue, but We're not penalizing precisely because this year is all about learning how the program works. We're trying to increase employer and everyone's compliance with the program. So we don't want to penalize. We really just are hoping that voluntary compliance will be gained. After March 30th, that's when contributions, if they're late, reports, if they're late, there may be penalties, there may be interest charged.
Next question. I saw in another document that an employee's 12 months goes back as 7 years and must not be consecutive. Wanted to confirm if that's accurate. Also, does that also apply to 1,250 hours? Is that over a 7-year period working with that employer?
Right. Okay. So again, we follow FMLA, which has created some strange little quirks. One of them is the definition of who your eligible family members are. And if you read those old slides, it is your child, your spouse, or your parent. Now, just like FMLA, that means that any mother-in-laws, father-in-laws, they're not your parents, they're your in-laws, so they're not covered. Again, that's straight from FMLA, and we follow FMLA. And siblings, unless you're in a situation where you're granted court approved guardianship over your sibling. Under FMLA, you can't take leave for them, and under paid leave, the same issue. The rule about the 12 months not having to be consecutive. Not that it must not be, but it doesn't have to be consecutive. It means like if you have a employee who say worked summers for you while they were in high school or college, that those 3 years can be counted over time, so that when they start for you full time, when they graduate, then they've already gotten basically their 3 times 4, their 12 months. That's in FMLA, so we wanted to make sure that we were consistent. Now, we're going to have all the information tracking that back to 1/1/25. We don't have the ability to look any older than that. But as the system goes forward, we'll be able to help you because we follow Social Security numbers. We'll be able to look back 7 years to see if your relationship with that employee they've gotten to 12 months over the last 7 years. Not many people are going to need that time. Some people, though, work for 3 years with their employer, so therefore have kind of gotten over that 12 months and then leave and then come back. And as long as they come back within 7 years, they don't have to start all over again at day one. Now, the 1,250 hours, that's measured from the date you put in your claim going back 52 weeks. So it's almost only that 1,250 hours of service. And by hours of service, it does not include time off, paid or unpaid, for things like vacation or for sick time. So that 1,250 hours of service has to be within the most recent 52 weeks from when you filled out your claims application.
Great. Next question. If a Delaware resident is employed full-time outside the state of Delaware, but works 3 days a week from home in Delaware, would they be eligible?
Yes.
Great. What if an employee has 2 employers and meet all parameters from both employers? Will both receive benefits from both employers if the employer has met the parameters to participate in the plans?
Yes. Now, again, the employer isn't paying anything. In fact, the employer stops paying the employees' paychecks during their period of approved leave. But if you are an employee who works 1,250 hours, which is basically 25 hours a week for 2 different employers, then you are eligible to make a claim against the hours and wages for each of those employers. Now, at some point in the future, we may be able to combine employers, but right now, each claim is kept separately. You'll receive 2 checks, well, not checks, 2 payments from the PFML Trust Fund one for each of those benefit amounts. And each benefit amount is determined by your weekly wages, average weekly wages with that employer, sorry.
Thank you. If no payroll deductions have been taken, do you still qualify to submit a claim at the beginning of the year?
Yes, employers are required to pay any payroll contributions that were either inaccurately or not taken at all. So those withholdings have to be carefully taken by employers. And that's true of pretty much every payroll deduction, whether it be for premium or another benefit program. You can't really reach back into prior payroll periods for what was earned back then and charge them a deduction in the current payroll period. For a missed payment, the employer is responsible 100% for all of the contributions that are due.
Thank you. Next question. Do the qualifying exigency and the family caregiver coverages share the time? Could I, for example, take 6 weeks of qualifying leave in 2026 and then 6 weeks of family caregiver leave in 2027?
So each of the 4 different types of leave, parental, medical, family caregiver, and qualified exigency, have a separate benefit duration. For parental, it's 12 weeks in 12 months. For the other 3, it's 3 separate 6 weeks maximum over a 24-month window. And then all combined, no more than 12 weeks in any 12-month period. And that will be tracked, and it'll be made simpler because the computer system will let you know how many weeks you're eligible for.
Great. Next question. Can employees also use voluntary short-term disability after they exhaust their Delaware state disability?
So many employers still have reason to use a group short-term disability program. As I mentioned, this is for medical leave, it's up to 6 weeks per qualifying for in a 24-month period. And you could use up that 6 weeks with, say, a broken leg. And then later on the next year, if you need another 6 weeks for some other illness or injury, there will be no time under this program, paid leave, to pay for those weeks. However, if you have a group short-term disability program, first of all, it's not just 6 weeks, it's 120 or 180 days. And then after that, many programs switch over to a long-term disability program that go out much, much further out. And what that means is 2 things. Our program can be easily depleted in a 2-year program if you are in really bad luck and you have multiple medical events. And our program will run out of weeks for you, whereas your group short-term disability is per medical event, and each one is dealt with separately. And also, we become more like short-term disability, and group short-term disability becomes more like mid-term disability, because they will cover you from the end of the 6 weeks all the way out to 120 days or 180 days before long-term disability starts. So, and if there is a qualifying event where both medical leave and group short-term disability can pay the claim, by law, our program pays first. We pay out our 80% up to $900 benefit and the number of weeks that are allowed for that medical event by the plan design. And then your group short-term disability can provide additional coverage on top of it. So there's still a lot of reason to use group short-term disability, but check with your carrier. We're going to be taking up a lot of that risk. So hopefully you should be getting a significant discount from your group short-term disability carrier because they're carrying some of the risk, but we're taking a lot of the risk that they used to cover.
Okay, next question. Can you take reduced schedule and/or intermittent leave for any type of leave?
So it's up to the doctor. The doctor decides. We're not in the business of figuring out we don't even know what your diagnosis is. So we can't tell you what is the proper leave schedule for you. You can also be able to take, if you're approved for 6 weeks of leave, you can take 2 weeks of that leave on a continuous basis. And at the end of the 2 weeks, you can take 2 more weeks where you work 50% of the time. And then the remainder of your time is available to you if the doctor approves as intermittent leave that you could use for, say, physical therapy or some sort of long-term intermittent care that you have to have in order for follow-up visits if necessary.
Okay, next question. Do state of Delaware employees have to use available sick leave before they can qualify for this program?
No. So when this law was passed, the rule was that employers could require their employees to use most of their PTO, their paid time off. And that was the requirement when it was passed back in 2022. Since 2022, the U.S. U.S. Department of Labor has issued new guidelines. And according to their guidelines, which we issued a new law to comply with, the requirement is that if you have a state mandated paid family medical leave program, such as this one, which you do, then you cannot use your PTO to take a place of a day of that mandatory leave. So even though your PTO is 100%, pays out 100% basically, because that's what a paid time off does, and we only pay 80% up to 900. The feds felt it was necessary, it was better for you to have additional days of leave, your full amount of PTO available for you when you return to work. But what you can do, and that means that employers cannot require you to use PTO, and you cannot voluntarily use PTO to replace a full day of state mandated PFML leave. But you can supplement if the employer has a program to allow you to supplement and you choose to supplement, it's voluntary, then you can supplement and go from your 80% up to $900 benefit under our program. You can make yourself even up to whole so that you can get your full paycheck back by dipping into your PTO bank.
Earlier you said people could take 12 weeks of leave per year. Is that the calendar year?
So FMLA has 4 different definitions of what a year is, which seems weird, but once you start understanding what they mean, you kind of get it. And what we use is the 12-month looking forward basis, which is once you have a claim, you can't have another. Once you use it up, that's where you start, is 12 months looking forward. It's explained so much better than I could ever explain it. If you look up information, I'm sure there's even TikToks about how to use a 12-week looking forward.
Great. So once you submit your claim, how long does the claims process take to receive your approval denial?
So the computer system could work if everybody puts in the information right away in as quickly as 1 day. However, I don't expect that to happen. The first step is the employee enters the information, then the employer reviews it. Then if it's not denied and if it needs to have approval from a doctor, you need to print out that form, you need to deliver it to your doctor needs to enter into our website, fill out the form, and then our system will then ask the employer whether or not, based on everything else, the claim should be paid. That process, I think the slowest part is going to be that certification of serious health condition. In other states, such as Connecticut, 65% of the claims that are denied are not denied because the person, the employee or their loved one doesn't have a serious condition, but rather because that form is never filled out by the doctor. That has always been the weak point. And we're doing two things. First of all, it's a mostly paperless system, which should speed things up. Once they get the form, then they can enter into our system. And then as soon as they hit submit, it goes directly into our computer system because it's a shared system. We all use the same computer system. We all have different access points and different permission levels. But also, we are working with different medical companies, medical information companies, to use their communication system so that you don't have to print out a piece of paper and hand deliver it to your doctor's office, or actually, when I say your doctor's office, I mean the patient. Sometimes that's you if it's a medical issue, medical leave issue. But if it's a family caregiver issue, it's your pediatrician. If it's your kid, it's your spouse's doctor, or it could be your parents' doctor. So to that doctor, whoever the patient who has the serious health condition, so that they can fill it out properly. But that can be done through this electronic communication system that is managed by a third-party vendor and also has much stronger anti-fraud systems built around it. So once it goes from mostly paperless to completely paperless, it'll be much faster, much more efficient, and we can really do claims as smoothly as possible. Now, the longest delay that's built into our system is that once the claim is approved and once we start paying claims, that payment will be made on a weekly basis. The first payment that goes out, there is a 2-week process because there are a lot of anti-fraud steps that have to go through. We're actually going to make phone calls. We're going to do web searches. We're going to do a lot of stuff, and it is going to slow down, at least at first, that first week's payment, so that the first week might take 2 weeks and you'll get all the back premiums, not back premiums, the back benefit payments that you are allotted.
Okay, next question. How would parental leave work if our employer offers a new parent leave that provides an additional 4 weeks for bonding? Also, what is the process to coordinate these two leaves if we use a third-party leave admin?
So the requirement is that employers must provide their employees a plan design that at least meets the minimum requirements of the Act. That's the 80% to $900. That's the 12 weeks of parental, 6 weeks of the other 3, and no more than 12 combined. But those are the minimum requirements. And if your employer wishes, they can provide additional benefits on their own or through an insurance policy if they can find an insurance carrier who's willing to pay for it. So your employer can supplement these benefits. You can also supplement these benefits, if your employer allows you to, through the use of your paid time off bank. So there's multiple ways that you can get more benefits. So if your employer provides an additional 4 weeks on top of our 12 weeks, that's fantastic. They can still do it.
Okay, next question.
And the last bit was if the employer self-insures and uses a third party, a different company to administer their claims, or if it's an insurance policy and you use the insurance company's administrative system to administer the claims, then you're not going to use Delaware paid leave and Delaware Labor First to access our system and to go through this claims process. Your employer who is self-insured or who has an insurance policy has to provide their own method of paying the claims. The exception to that is we allow self-insured companies, there's only a handful of them, to use Delaware paid leave for free because they're already giving us information such as the hour and wage reports. And so the information is largely in there, and we'll be able to help you go through the process through Delaware paid leave and we will advise your employer how much of a check they should write you at the end.
Next question. How long before the start of leave do you need to begin filing a claim?
So the law says that wherever possible, that you should do a claims application 30 days before the anticipated date of your leave. Now, in many cases, you'll have a good idea if you're in parental leave issues. It's for when the kid is healthy. So it's not the thing. It's not a pregnancy or a delivery related medical issue. That's either medical leave or family caregiver leave. But for that bonding with that healthy kid, you can definitely give 30 days notice. And the system will help manage that process for you. If you have a medical emergency, basically you can file the claim after the medical emergency happens. You may be unable to fill out a claim form. You may be a little busy with taking care of your health needs. And so you fill out the claim form later. If, Lord forbid, you're incapacitated or you need to have somebody's help, we have this process called a designated assistant, and that person can file a claim on your behalf, and they can continue keeping updates on your claim and provide additional information as needed. For qualified exigency, as long as you give us information, a heads up for when you have the military orders, you usually have a heads up for that. Occasionally, it may be that you have to leave the next day. That's understandable. That's the equivalent of a medical emergency.
Okay. If I move to a different state and have not used PFML, what happens to the money I have paid into the benefit?
So this is an insurance program. If you had to, the other way to do this is the way that people were supposed to do it under FMLA which is take 6 weeks worth of pay, maybe 3 months worth of pay, put it into a special account and never touch it ever again. And that's a whole lot of money just sitting there. Earning interest, that's nice, but just sitting there. We require a smaller amount per person, but it's paid by all up to 417,000 Delawareans who are mandated as part of this program. If all of them joined the public plan, that would be 417,000 employees paying into the program. And then anybody, that's how you pay out all the benefits. So just like if you have homeowners insurance, the alternative is for you to put the entire cost of rebuilding your home and all the possessions into a bank account and not touch it, or pay a small amount per month, and it's not small, but an amount per month, certainly less than what you would cost to replace everything. You pay out that every single year. And just like in medical insurance, health insurance, or any other type of insurance, if you don't put in a claim, you don't get the money back because that money is used to pay other people's claims. But on the other hand, you haven't had a serious medical event, your house hasn't burnt down, whatever the risk is that you're trying to protect against.
Okay. Is there a waiting period before benefits become payable, or is this paid starting on day one of the leave beginning?
Yes, so there's 30 days that you should try to, if you have advanced warning, like an elective medical procedure, you need to give us at least 30 days. So that's kind of a waiting period, but not really, because as soon as you give us the date that you have to go out, you get paid effective that date. If you have a true medical emergency, a car accident, heart attack, whatever that situation is, it can even be retroactive to the date that you went out. There is no need for you to have, like what short-term disability sometimes calls, an elimination period, where you're on your own for the first X number of days, X number of weeks, sometimes a month, before the benefits actually start kicking in which case you get neither a paycheck nor a benefit. Our program does not work like that. You get paid benefits on the first date that you need them.
Next question. Is paid leave different than FMLA, and can they be taken together or taken one after the other, or does it need to be taken together?
Yeah, so FMLA is the federal program, and we are 90%, 99% really, well, depending on the thing. We pretty much exactly overlap with FMLA. The main difference is that some things we have to do because we're paid and they're not. Uh, One of the biggest differences between paid leave and FMLA is intermittent leave. Under FMLA, you can take unpaid leave for as little as 1 hour. However, there is such an administrative expense, including all the anti-fraud and the transaction costs to administering a benefit payment, that it doesn't make financial sense to do less than an entire day. So intermittent leave for paid leave, you need to take a full day of leave. Now, you're legally entitled if if you're in a company that has 50 or more employees, and therefore you're legally entitled to FMLA. You're legally entitled under FMLA to take an hour of unpaid leave. It just means you just won't get a check from us, but you get job protections, you get anti-retaliation, you'll get all the things that FMLA provides, but you won't get the check. You have to stay out for a full day in order to get a check. And that's one of the few things that's difference between FMLA and paid leave. They're designed to run concurrently so that when you're out on FMLA, you're also out on paid leave. And the reason why we have employers making the initial decision that, again, is overridden if you ask for a division of paid leave review of your claim. But the reason why we have the employer make the first decision is because under FMLA, the employer makes all the decisions about whether or not you can take FMLA. And all of the reasoning behind whether or not you get to take a claim, to get to take leave under FMLA is exactly the same process that they have to go through for FMLA or for paid leave. So they really are overlapping each other. The two Venn diagrams are nearly overlapping.
Great. Next question. During the claims process, one of the steps indicates that the employer must review the claim and provide additional information. Is this step required, or can the employee also upload additional information on their end? In other words, is this step exclusively for the employer to complete, or can the employee submit what's needed so the employer doesn't have to?
So that step happens after the employee fills out their claims application. So we'll ask you for all the questions that we think you'll know the answer to. We'll ask you if you're still actively employed. We'll ask you if you if this is a work-related illness or injury. But by law, your employer is the one who is supposed to know whether or not it's a work-related illness or injury. So the way the process is set up, the employee fills out their application, the employer reviews the information, can make edits to it if necessary. The old information is retained by our system in case there's a conflict, and they're sometimes asked additional questions. And an employer has up to 4 days to fill out that form. If they don't fill it out within 4 days, it goes directly to the medical professional, if required, to complete the certificate of serious health condition. We don't require the employer to do that step. We ask them if they'd like to do that step. And if they don't fill in the additional information, the medical certificate is still sent to the doctor's office for the process to continue. However, ultimately, the employer is responsible for making that approval or denial based upon the advice of the system.
Okay, I think we have time for 2 more questions. What if an employee is employed by a company for another state but works in Delaware, and they are entitled to this are they entitled to this paid leave program?
Yes, so it's all about where you physically are located when you perform your work duties. And it's all about it's a lot like sports betting. Those old sports betting ads used to say you have to be physically present in X state in order to participate in this sports betting program. Same exact thing. You have to be physically present, earning income in Delaware in order to qualify for Delaware paid leave. And you need to be physically present earning 60% of your income each quarter in order to qualify for Delaware paid leave. Now, each state is separate. There are no federal rules. No, up until January, there were no federal rules. Now there are very few federal rules, but each state is largely separate and different. Maryland is developing their own program that they're going to be implementing soon. New Jersey has had temporary disability income, which became a PFML program, but TDI, temporary disability income, in New Jersey started in the 1940s after World War II. And DC, which isn't that far away, has their own program that they've done for the last 5 years. PA is the only nearby state that does not have currently a paid family medical leave insurance program, but there are no federal rules. So Maryland, New Jersey, DC, New York, all of those states, you have to look at those rules for those states to see if you qualify for a benefit from them.
Okay, and our last question. Are there work requirements following scheduled paid leave? What happens if an employee quits following their paid leave?
Well, here in Delaware, people are allowed to quit. There you go. Because otherwise, I think we fought a civil war about that.
All right, that was our last question of the evening. Thank you for joining us, everyone. So all of these questions, if there are any remaining questions, we can get them answered and updated on the website, on Delaware Paid Leave website, and a recording of this webinar, as Chris mentioned, will be posted on the Delaware Paid Leave website as well.
And again, if any of you think of a question that you'd like to ask, you can come, and I provided you my phone number, my email, just send that right along. We also have a general email box, which is pfml@delaware.gov. PFML, paid family medical leave at delaware.gov. It's also listed on our website if you want to go check that out. We'll answer any questions you have. In addition, you can sign up for what we call virtual office hours on our website. And that's on Tuesdays and Thursdays. Each day there's a 1 o'clock and a 1:30 appointment. Unfortunately, it gets scheduled out pretty far ahead, like we're in January. If you actually if you asked for a virtual office hour today, but I look at those as they come in, and there's a place for you to ask the question, and I can just answer the question if it's quick and easy. Or if it's something that you really desperately need an answer to, we can arrange a phone call at an earlier time.
Great, thank you.
All right. Thank you very much, everyone.